Let's move on to the markets now. The NSE All-Share Index slightly higher today, up 0.0%, closing at 37,358 points. If we run through the gainers, today we had the likes of MC Nichols, pretty much a story around small cap companies. We have the likes of Prestige Insurance up about 9%, Eternal Oil, downstream petroleum producer, up 7.6%, Nimeth, also a small pharmaceutical company, up about 6.25%, while Honeywell Flour is up about 5.7%. And let's now cross to the Nigerian stock, not to the Nigerian Stock Exchange, the Diamond Bank, where Jude and Anele is standing by. And after this recent Monetary Policy Committee meeting, Central Bank Governor Sanusi, Lamido Sanusi, told CNBC Africa, Jude, that more banks are creating more loans to small borrowers. And I want to get your thoughts on that trend. Is that a trend that you can confirm right now?
Yes, well, I can confirm that. It's apparent that with what has happened on the savings product side of banks, where interest rate has gone up recently with the activities of central bank, most banks are beginning to see that the only way they can maintain their yield or slightly increase it is to begin to lend in the retail space, where the lending rates are slightly higher. And of course, you find that the regulator has not tried to do anything on the lending side.
Right.
Though here there are plans to also reduce lending to MSMEs in the sector.
Right, but if we take a look at the MPC results, of course, it was widely expected that the rates will not be changed. What does that mean for small borrowers right now?
Well, I think largely it's still okay. Of course, if they had reduced the rate like some people had expected that it would happen, they may have helped to drop the lending rates a bit. But I think despite the fact that the rate has remained constant at 12% for the past almost 6 months, getting to 1 year now,
right.
What has happened is that banks have maintained a steady lending to this sector, especially to the retail space, because like I said, that's where the margins are still comfortable for banks.
So you anticipate that
the revenue side is contracted.
The flow to lending for small borrowers will be steady, as you put it, or do you think we're going to see it pick up a little bit? Because when you look at the projections for quite a few of the banks, many are actually projecting growth of close to 15 to 20% in their loan book this year. So your thoughts about the key drivers for that loan growth?
Yeah, I think that will happen. If you check the plans for most banks for 2013, when they had their AGMs for 2012, you find that most of them said that retail lending will account for about 20% of their total lending. But what that means is that some of them are standing at about 5% of total lending. That's retail assets being 5% of their total lending. Right. So moving from 5% to 15 to 20% will, of course, indicate growth in the sector.
Right. Of course, we just got some news about the plans for the Kaduna and Afam power assets to be sold. And I want to get your thoughts on how the SME company, the small companies are shaping up in the context of the power reforms right now. Are we seeing many will not say it's significant, but are we seeing any improvement for the fortunes of many of these SMEs with respect to power right now?
I think so, largely, especially for those that are playing in the sector. What you find is that if you looked at the value chain, you find there's a lot of opportunities for small and medium-scale businesses in that area. But when it comes to actual power generation and distribution and what these MSMEs do for power, and that's still in the realm of speculation because this power generation has not improved for a while, and we hope that if by the end of this year it goes up to 6,000 megawatts, it may improve the loss and operations of MSMEs. But in terms of opportunities in the power sector, I think there are a lot for MSMEs in that area because most of them will key into the value chain, and you find that will also create some jobs in the sector.
Okay, if we come back to the discussion around growth, in the first 4 months of the year, we saw growth of about 18% in terms of credit, although most of that is linked to the public sector. What kind of growth rates are you anticipating for the SME portfolios of banks, broadly speaking?
No, from what we see and what we hear and the strategies we see most banks have marshaled, we are expecting almost a growth rate of about 20%, but slightly 20 to 25%, but not more than that because it has to be gradual. Lending to that space is actually not very easy because you find that these loans are very small value loans. Right. And you have to do so many to build a volume. So it will take a while. Maybe in another 3 years it will grow. Right.
How's technology?
But right now, I think 15, 20%, yeah.
Right, okay, but how's technology enabling this right now? To what extent are banks getting technology involved in this? Because we're in a technology age these days, and many people will expect that technology will be a big part of these programs.
Absolutely. In fact, if in the retail space, without technology, your cost will kill you. So you find that, especially for Diamond Bank, most of what we do in the retail space, especially in the lending side, is done through scorecards. So what you do is that when people apply, the application is done online, and the qualification is also done online. So people don't do the manual verification and analysis of loan applications. So you find that it's also technology-driven, because it's like you are trying to build a watch. There's a watch you build in Switzerland. Those watches you build in Switzerland are custom-made watches. They are handmade. If you want to use Casio as an example, Casio is targeting the mass market, so you have to use mass production to build the Casio watches. So if you come to the retail space, with technology you can mass produce. Without technology, then you are there because the cost will kill you. So the use of technology is very rampant in the retail space, and especially in the lending area.
Okay, so the banks are producing like Casio right now. I hear you. Okay, let's talk a bit about the deposit side. The deposit side, of course, that is key to the banking business. So to a large extent, in the past, we've seen many banks focus a lot more on that, trying to get the retail deposits that they can lend to the larger corporates. How do you see deposit growth this year?
Well, I think it will grow very high because of what some banks are doing in the financial inclusion area. One, when you talk about financial inclusion, we are talking about those that are unbanked and those that are underbanked and those that are underserved.
Right.
What banks are doing currently is to bring back those that are underserved, include those that are underbanked, and then possibly get those that are underbanked. And with some of these activities happening, I believe that growth in the retail area will increase. What happens most times is that banks have used the wrong approach to try to mop up deposits from the retail market. But now I think they are getting their strategies right, and with the kind of channels they are deploying, and this will happen. Before now, you find that banks or bank salespeople will go out and say, I'm going to mobilize deposits. You don't mobilize deposits. What usually happens is that deposits that you get are outcome of people's reality. So if I'm a salary earner, my deposit will come to you because my salary is domiciled with you anyway. If I'm a businessman, my deposits will come to you because my revenue channels or the tube through which it comes is piped to your own bank. So it's not about deposit mobilization as to the activities you do to meet customers' needs.
Right.
Have solutions that also solve their problems. So that's where it comes from. But I think that deposit will also grow and grow very well in the retail space.